We have not received some amount, outstanding payment, for example, rent payable not paid, and why we have to prepare the income and expenditure account. We paid previous year advance, paid for utilization of the this year, current year. The balance sheet, after at the end of the year we have to prepare the balance sheet at the end of the year. Hello my dear students, I am your Ajay sir, faculty, Department of Commerce and Management, Vidhyaashram First State College, MYSURU, a temple of excellence. My dear students, in today's session I am going to handle the subject Financial Accounting 2 for 2nd Sem BCom, and the topic is Financial Statements for Non-Profit Organization. See, in the previous session we have discussed what is the meaning of non-trading concern and why we need to do the accounts on the non-trading concern, and also what types of accounts we prepare in the non-trading concern. Now let's go to the first slide, receipts and payment account. What do you mean by receipts and payment? Receipts means whatever the amount we received, and payment means whatever the amount we paid to the third party. Receipts and payment account is a summary of cash receipts and cash payments of non-trading concern. So purely cash receipts and cash payments, whatever the amount we paid as a cash and whatever the amount we received in cash term, all should goes to receipts and payment account. And also organization relating to a given period of time, usually year. So in accounts what we have to do, so every year we have to open the books in the beginning of the year, again we have to close the books of accounts in the end of the year. What accounting period concept says, so even though business is it has no end, business doesn't have any end, but in order to understand the financial position of the concern or financial position of the business institution, we have divided the life of the business into small parts, that is a 12 months a year. So at the end of the year we have to analyze or we have to prepare a books of accounts to understand the financial position of the company or position of the non-trading concern. So in order to understand the financial position, we have to prepare the books of accounts. To prepare books of accounts, we have to add all the information. So received in cash, paid in cash, all goes to receipts and payment account. So it is prepared on the cash system of accounting. So already explained to you, only cash transaction should goes to receipts and payment account and out of closing cash balance. So we will be having opening cash balance and closing cash balance. So previous year closing balance is the current year opening balance, and current year closing balance is the next year opening balance. So to understand the closing balance, what is the actual cash is available in the NPO or in NTC, to understand what is the actual cash amount available at the end of the year. So in order to understand this, we have to prepare the receipts and payment account. Next one, features of receipts and payment account. What are the features of receipts and payment account? Let's see. It is a real account. So cash is a real account. So it is a real account. So what is actually we have in the cash from, to identify that we have to prepare this. Income and expenditure account is a nominal account. So what nominal account says, what real account says. According to accounts, the golden rules of accounting. So real account says debit what comes in, credit what goes out. So it is in this debit, all asset comes to the debit side, credit side. All cash comes to business should goes to debit side. All cash goes out of the business should goes to credit side. So in accounts we should feel ourselves as a business. So as an accountant I should feel myself as a business, and whatever come to me it is debited, whatever goes out of me is a credited. So if in case no profit and loss account or income and expenditure, it is a nominal account. What nominal account says, debit all expenses and losses, credit all incomes and gains in case of nominal account. In case of receipts and payment account, debit what comes in, cash goes out. Now next point, it is prepared on cash system of accounting. Only what we receive in form of cash or what we paid in form of cash should goes to receipts and payment account. It prepared on the cash book. So in the form of the cash book we will prepare. So we will be having opening balance and also will be having the closing balance. At the end of the year we will understand, or we can understand, what is the closing balance, or at the end of the year what is the actual amount we are having on hand. Next one, it is prepared at the end of the accounting year. So at the end of the accounting year we have to prepare the receipts and payment account in order to understand what is the actual cash is available in the business. Next one, it includes both capital and revenue items. So you may have purchased the capital items. For example, purchase of machinery for cash, sale of machinery for cash, receive interest from cash, paid commission through cash. So it may be, for example, and also purchase building. So it may be capital item. Either you paid for capital item or received from amount as a capital income. So if you paid for revenue items or if you receive the revenue income, so all forms of cash payments and cash receipts should goes to receipts and payment account. Next one, it does not include non-cash items like depreciation and bad debts. So which is not in the form of cash, which does not comes in receipts and payment account. Next one, it starts with opening cash and bank balance and ends with closing cash and bank balance. See, previous year closing balance is the current year opening balance. Current year closing will be the next year opening. See here. So we have to, this is receipts and payment account. So this is debit side. So it is to balance brought down. So we have to, again, whatever the cash comes, we have to add all the amount like rent received to rent, income received or interest received to interest. Are understanding? Next one, now to subscription received. So any amount received through cash form or through bank should goes to the debit side. Next one, payment, paid as commission, by commission paid, by commission paid, by expenses paid, by light charges paid. So all payments comes under payment side. This is receipt side, this is payment side. Ultimately, after paying the amount, we have to identify the by balance carried down. So here previous year opening balance. So this is the actual amount we are having. So we have to consider cash in hand. This amount should be considered as a cash in hand in the balance sheet. So this is the actual cash in hand. At the end of the year, we are having some amount. It may be cash in hand or cash at bank. This is the actual amount we are having in the on hand, or on hand we are having this much amount. We have to show it. So while taking cash in the balance sheet, we have to consider this amount. Now let's go to the next point. It does not include outstanding receipts or payments. We have not received some amount, outstanding payment, for example rent payable not paid or some income receivable not received. It does not include any amount like income and expenditure account and profit and loss account. In income and expenditure account, even though we have not paid, we have to add it is outstanding. Even though we have not received, it should be added outstanding income. It should be added outstanding income. So but in receipts and payment account, no items which is not paid, which is outstanding income or outstanding expenses, or any advance received will comes here. So if we paid advance also comes here, but outstanding we cannot show outstanding here. Next point, income and expenditure account. So next heading is the income and expenditure account. What do you mean by income and expenditure account, and why we have to prepare the income and expenditure account? Let's see. Income and expenditure account is a revenue account and non-profit organization. So it is a revenue account, ordinary activity of business, whatever the amount, whatever the income we received through ordinary activity of the business should comes to the income and expenditure account. So for example, purchase of raw materials, it is an ordinary activity, revenue item should goes to income and expenditure account. Next one, sale of finished goods, it is an income we generated, so should goes to income and expenditure account. So any loss of payment of electricity charges, payment of ordinary activity, payment of salary, payment of and also depreciation, it is a nominal account. Income and expenditure account is a nominal account. We can add or we can show depreciation, any losses, any expenses we can show, and also we can show income. So now what nominal account says, now debit all expenses and losses, credit all incomes and gains. So whatever the nominal expenses is there, whatever the expenses is there, they should be shown in the debit side of the income and expenditure account, and whatever the losses is there, whatever the incomes or whatever the profits is there should comes under the credit side of the income and expenditure account. Next one, it is a summary of income and expenses of non-trading concern prepared at the end of the year. So in order to understand what is actual income of the current year, what is the loss of the current year, we have to prepare the income and expenditure account in case of non-trading concern. Next one, it is prepared on the actual system of accounting. What do you mean by actual system of accounting? Even though we have not paid, it should be shown it is outstanding. Even though we have not received, it should be shown interest generated but not received. So rent outstanding, rent payable not paid. So it is an accurate system of accounting. Next one, in order to identify the surplus or deficit. So what is the surplus? See, I will show you the example. This is, even though, keep this in mind, so many of you confused with which side you should write expenses, which side you should write income. Even though we are telling income and expenditure here, so this, the heading is income and expenditure, income and expenditure, but here we have to show debit all expenses, credit all income side. So here we have to show it is income this side, expenses this side. So our understanding, so income this side, debit all expenses and losses, credit all incomes and gains, isn't it? So income and expenditure account is a nominal account. So what nominal account says? Debit all expenses and losses, credit all incomes and gains. So all the expenses and losses should show in the debit side. Salary paid, rent paid, commission paid. Our understanding. So here interest received, commission received, and also outstanding of current year. Our understanding, outstanding of current year. If we have outstanding rent is there, add any outstanding. So please, one thing you have to mind it, anything outstanding of the current year, we have to add it. Anything outstanding of the previous year, we have to deduct it. Our understanding, anything outstanding of all expenses, add. Outstanding of income, add. Current year outstanding, add. Current year, no. Previous year outstanding, deduct. Previous year outstanding, deduct. Current year outstanding, add. Previous year advance, add. Current year advance, deduct. Why we have paid the amount in previous year? We have received some expenses. We have received in advance. So that should be added now. So previous year advance, now we have to utilize that amount. That's why previous year advance added, previous year outstanding deducted. Current year outstanding added, current year advance deducted. Why? Because we are paying advance for the utilization of the next year. So only current year expenses, current year income we should show in the income and expenditure account. So any outstanding of the current year add, any prepaid of the current year deduct. Any outstanding of the previous year deduct, any prepaid of the previous year add. Next one, it is prepared on the accrual basis over. So in order to identify the surplus or deficit, we have to prepare the income and expenditure account. Next one, it is a nominal account. Already explained you, it is a nominal account. So nominal account means what? Debit all expenses. It is, so even though we are writing income and expenses account heading, income and expenditure account, this side, debit side should be shown as expenses. Here it is income. Why we am showing income in? So debit all expenses and losses, credit all incomes and gains. Nominal account says debit all expenses and losses, credit all incomes and gains. So what are the expenses? For example, salary paid, rent paid, no, and other expenses paid, other maintenance charges paid. So all expenses should come here. If you have a loss, so loss from selling the asset and loss from some any other activity, we should show in the debit side is 2. This is buy. Okay, here all incomes, rent received, salary received, commission received. So profit from sale of any fixed assets. So all income should come in the credit side. This is the nominal account. Receipt and payment account is the real account. Income and expenditure account is a nominal account. Next one, it is prepared from the receipt and payment account. On the base of receipt and payment account, and also some adjustment will be given there. So on the base of that, we have to prepare the income and expenditure account. Any outstanding expenses. So outstanding expenses we have to pay, not yet paid. It is an actual concept. On the base of actual concept, we are preparing. So any outstanding expenses, add, for example, salary, add outstanding salary of the current year, deduct outstanding salary of the this current year. So deduct outstanding of salary of the previous year. Okay, add outstanding, and also if you have any advance payment. So outstanding, if you have any advance of the last year, add it. Advance payment of the last year, add it, because we paid previous year advance paid for utilization of the this year, current year. If you pay this year advance for next year, we are paying now. So why you add next year amount? So it will be added in the next year. Don't take it. Okay. So previous year advance, take it. Current year advance, leave it. Current year paid in advance. Outstanding, previous year outstanding, don't take. Delete it. Current year outstanding, take it. Understand? Only current year. Whatever the amount related to current year, we should take. And previous year advance payment, utilize this year. We should add it. Any previous year outstanding, delete it. It belongs to previous year, we should not take it. Come to current year. Current year outstanding, add it. It belongs to current year. Current year prepaid, it belongs to next year. Don't take it, leave it. Delete it. Current year outstanding, add. Previous year outstanding, delete. Current year prepaid, delete. Previous year prepaid, add. Next one, it is prepaid at the end of the accounting year. Obviously, at the end of the year, we have to understand what is the surplus or deficit. We have to understand. So if you have any excess amount this side, so for example, 10 lakh rupees is there, okay, so which is debited. So if you get more amount or excess amount credit side, difference comes in debit side. If you have excess amount in debit side, difference comes in credit side. So when you have excess amount credit side, what nominal account says? Debit all expenses, credit all income. So income is more than expenses. Difference you should get in debit side. When you get difference in debit side, that represents surplus. So when you get difference in credit side, if you get more amount here, debit side, the difference comes in credit side. This is called deficit. This is called deficit. So deficit is loss. Here surplus is gain or income or understanding. Next one, it includes only revenue receipts, incomes and revenue payments. Whatever the actual current year, that's why current year means revenue. So ordinary expenses and ordinary incomes comes to the income and expenditure. Next one, it also includes non-cash items like outstanding and also depreciation, any losses, all comes under non-cash items, depreciation and bad debts. Next one, it is prepared on the same lines as profit and loss account. So in the business organization, we will prepare the profit and loss account, but this is we are running a non-trading concern. Since we are running a non-trading concern, this is not for business purpose. That's why we are preparing income and expenditure account. So if you prepare profit and loss account, here it is profit. Instead of writing surplus, we'll write profit and loss account. That represents profit. If you have deficit in the profit or in the business concern or trading account, what we'll do? We'll show it as a loss. So if you get, it is a loss. In trading concern, it is a loss. If you get a profit here, it is a profit. So in non-trading concern, it is surplus. Instead of calling it as a because why we are not calling as profit? If you call it as a profit, you have to pay the tax. If you call it as a profit, we have to pay the tax. So on what basis we will pay the tax? On profit we will pay the tax, isn't it? So the NTC, non-trading concern, are exemption from the payment of taxation. That's why we are calling as a surplus. If you call it as a profit, then you have to pay the taxes. So in order to avoid these things, we are calling as a surplus and deficit. If you call it as a profit and loss account, then the tax authority will come and ask you for payment of the tax. Next one, it is prepared on the accrual concept. So accrual concept means what? So if you are not paid the outstanding, any outstanding, show it outstanding. Even though we are not paid, it has to be shown. Already we have paid, it should be deducted. Understand? Here also, not received, we have to show it is not received. Already received, it should be deducted. Next one, it does not start with opening balance or closing balance. It does not start as receipt and payment account. It does not start with opening and closing balance. Only whatever the difference you get. If you get the difference in, so bigger amount, right? Both the side bigger amount. Let's assume here it is 5 lakh rupees. Total amount is 5 lakh rupees. If you add all the items, it is 5 lakh rupees. Here it is 10 lakh rupees. So which is bigger, 10 lakh rupees or 5 lakh rupees? 10 lakh rupees is bigger. So write both the side 10 lakh rupees and 10 lakh rupees. So we have to tally it, right? Isn't it? We have to tally the amount, 10 lakh rupees, 10 lakh rupees, right? 10 lakh rupees. So if you deduct all this item, you will get the difference of 5 lakh rupees. Write 5 lakh rupees difference here. Deduct all the items, then we'll get both the side equal, 10 lakh and 10 lakh. All the items 5 lakh plus this difference 5 lakh, we'll get 10 lakh rupees. Whatever the difference we get, that is called as surplus. Whatever the difference we get, that's called as surplus. Next, go to the next point, the balance sheet. After, at the end of the year, we have to prepare the balance sheet at the end of the year. Next one, same, which shows assets and liability. All assets should go to assets side, all liability should go to liability side. Next one, non-trading concern organization. At the end of the accounting year, we have to prepare the balance sheet. Next one, balance sheet of NPO is prepared in the same manner as trading concern. As we prepare in the business organization, how we prepare the balance sheet, same manner we will prepare the balance sheet here also. Next one, what are the key terms? So what do you mean by capital fund? It is a difference between assets and liabilities called as capital fund. If you don't have capital fund in the previous year, they have to give the capital fund. If you don't have capital fund, we have to take all the previous year assets and liabilities and we have to calculate the asset capital fund. If they did not give capital fund, we have to prepare the previous year balance sheet also. Next one, subscription means the membership charge. Membership charge, in order to join the institution, we have to pay some amount. It is called as subscription. There is a recurring source of income to NPO. Next one, life membership fees is also like when they have to pay the amount. At the, for example, I am a member or I want to become a member of the NPO, non-trading concern. So full life, for example, for full whole life, I have to pay some amount. It is a bigger amount, 1 lakh rupees, 10 lakh rupees they will charge. So it is a membership only once in lieu in annual subscription. Subscription means every year they have to pay some amount. So it is a life membership fees means for whole life I will pay some lump sum amount, that is called as life membership fees. Next one, legacies. Legacies means any gift, any donation received from the NPO. It is a gift, donations received by the NPO under will on death of the donor. For example, Mr. A will say a trust, he will contributing amount to NPO. What he will tell, after my death, whatever the asset is there should goes to this trust. So they will write a will and after their death, whatever the asset is there comes to the non-trading concern. That is called as legacies. Next one, entrance fees or admission fees. If we are conducting any tuition or any other, for example, for education institution, so whatever the fees we are collecting, that is called as admission or entrance fees. Next one, endowment. Endowment fees means, so this provides a permanent means of support for any person or donation which is meant to recover expenditure on a particular purpose in future. So in future they have to recover the amount. At the end of the year they will recover the amount. So till then it will be shown as an endowment fund. Next one, difference between capital expenditure and revenue expenditure. Already explained what is the difference between capital and revenue expenditure. So capital expenditure, it is on fixed assets, purchase of fixed assets. It is a regular income for selling goods. Every day we have to prepare the goods or manufacture the goods and sell the goods. Next one, it is non-recurring. It is recurring. It is not day-to-day activity, capital expenditure. It is every day. Recurring means everyday activity. Next one, it incurs the value of net assets. So its benefit is restricted to only 1 year. So whatever the amount or whatever the amount you spend and whatever the benefit you get, that is exhausted within 1 year in the revenue expenditure. But whatever the benefit you get from that expenditure, I'll get the benefit. The benefit will not exhaust within 1 year. You can get the benefit more than 1 year, then it's called as capital. Next one, the benefit exhaust is over. Now it is not a loss to a concern. So it is no loss will be, because when I sell the building, there is no loss. I will sell the building for profit. But when I sell the goods, after finished goods, if I sell, I may have loss also. Next one, it incurred on extending existing fixed assets. And also if I want to build more building in the institution, then also we can call it as a capital. The fixed asset in good working condition. So if you have any spend for the good working condition of the fixed asset like repairs, it comes under revenue expenditure. Next one, difference between capital expenditure and revenue expenditure. Capital receipts and revenue receipts. What is the difference between capital receipts and revenue receipts? These things already we have discussed. Capital receipts means more than 1 year. The benefit you should get more than 1 year. The benefit is not more than 1 year. Next one, not source of income. So it is not source of income. Only once 10 years or 5 years we will do it. Next one, every day. It is everyday activity. Every day we will sell the product and get the amount. Next one, it is not recurring, regular activity. It is recurring, regular activity. Some of the capital receipts are meant specific purpose. So for example, some amount will be kept for specific purpose as a fund, but here there is no special purpose fund will be there. Next one, it is not gain or it is not gain to concern. It is not a gain, it is a profit. So it is a gain to concern because we will make the profit. The next one, difference between income and expenditure account. What do you mean income and expenditure account, profit and loss account? Now next point is, it is revenue account of non-trading concern. So it is a actual revenue account, how much we receive every day, day-to-day activity we will write it. It is trading account, revenue account of the trading concern. So who will do the business, they will prepare the profit and loss account. Here who will not do the business for the purpose of profit, they will do the income and expenditure account. It is prepared by the non-trading concern, it is prepared by the trading concern. Next one, it does not start with any balance, opening balance and closing balance will not be there, but here also it starts with balance of trading account. So it starts with trading account, opening balance will be there. Next one, the closing balance of this account is called excess of income or expenditure or surplus. Surplus or deficit. Here closing balance will be called as profit or loss. Next one, difference between, so receipt and payment account and income and expenditure account we are having. First one, it is a real account. So it is a real account means what comes in actual and what goes out. Debit what comes in, credit what goes out. Debit represents all comes to the account, credit represents all goes out of the accounts. It is a nominal account. Debit represents all losses and expenses, but credit represents all incomes and gains. Next one, it is similar to cash book. So cash book also opening balance will be there, closing balance will be there, and also what comes to business, what goes out of business will be there. So it is similar to cash book, but it is similar to profit and loss account. It is similar to profit and loss account. Ultimately we have to identify what is the profit and loss. Next one, it's prepared the cash system of accounting, what actually received by the business, what actually paid by the business. But it is prepared accrual basis. Even though we are not paid, we have to show it is payable. Even though we are not received, we have to show it is receivable. Outstanding and prepaid should be shown here, but here outstanding, prepaid will not be shown. Here also depreciation will be shown here. Depreciation cannot be shown here. Next one, it includes both capital and revenue items. So both capital and revenue items. It is only revenue item. Everyday day-to-day activity, expenses on revenue items, received from revenue on expenses as revenue will be shown in the income and expenditure. It does not include outstanding items. Outstanding prepaid expenses, outstanding expenses will not be shown here. So prepaid will be shown because it is received, but outstanding cannot be shown here. Here also outstanding will be shown here. Outstanding rent, outstanding salary, outstanding any commission will be shown here. So in the next session, we are going to discuss on what is the format of the non-trading concern, how to prepare the format of non-trading concern will be shown here. These are all for 5 marks and 10 marks question. Keep this in mind. They definitely will be having one question on this. So only just write points. If they ask for 10 marks, 5 points is enough. If they ask for features of income and expenditure account or features of receipts and payment account, they will ask for 5 marks. 5 marks is 5 points is enough. If they ask for 10 marks difference, right? 5 marks for receipts and payment, 5 marks for income and expenditure. That is enough. So here also difference between income and expenditure and profit and loss account. If they ask for 10 marks, write both of this. If they ask any feature, enough. 5 features of each, enough. Here also capital receipts and revenue receipts, capital expenditure and revenue expenditure. So I hope you understood what is the capital item and revenue item. More than year, benefit more than year, capital. Benefits less than year, revenue. Or understanding income. So for example, if you receive the income or huge incomes is a capital. Now regular income is a revenue. Like this we will bifurcate the capital and revenue items. And the next session we are going to discuss more problems, very easy problems, already we have studied in the second PUC also. Same type of problem we can expect here. The 2 for 15 marks compulsory and also 10 marks compulsory. 5 marks theory also will be there. Easy chapter, don't worry, easily you can score very wonderful marks. Till then, thank you so much. Next session we will discuss on the problem.